Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. Okay, so we're climbing this upper Bollinger Band. We are marching, unless the bears do something about it, we are marching to 3,400. We are marching to new all-time highs. Buckle up, accept it, off we go. You may not want it to go there, but unless the bears do something about it, where else are we going to go? We're not going to hang out here. They're going to continue to bleed up. So we had these 2 days. We talked about it last week. 2 days of support at the daily mid band, and the next stop is upper band. And you know, our baseline observation of whether a particular market is sell rallies or buy dips is whether or not the contract wants to live either above the middle band or below the middle band. A sell rallies market wants to live between the middle band and the lower band. Comes back to the middle band, sell it again. Buy dips markets, they want to live between the middle band and the upper band. Migrates back towards the middle band, buy it. Buy it. Buy it. Buy it. And up you go. Let's go to the hourly chart. So nothing particularly exciting last night. The biggest takeaway for me is, 1, 2, 3 looks at the hourly mid band. That tends to be holding. 33.55 half is your new high of this move. The all-time high is 33.97 and change. We had a little consolidation period Wednesday, Thursday, head fake down, and then a pretty sizable move up that then held serve on Friday throughout a couple of dips. They finished it strong. They pushed it down off the open. Couldn't do anything with it below that hourly mid band. And it's been holding. As we get into the open today, that hourly mid band area is going to be important. It's at 45.32. Volume weighted average price is at 47. 5-minute mid 47.63. Proprietary moving average is basically 49. So 45 to 49 is going to be the hinge, one way or the other. Do the bears have an opportunity to convert the hourly mid band and get back down towards the Globex low? Sure. They just have to do it. Put one foot in front of the other and get it done. But they're so easy to push off of and chase out of anything that they're trying to do that once that upward momentum gets built, you head to higher prices. We've been seeing it with the exception of 2 or 3 periods of weakness in the last 12 years, this has basically been the tape. So you see the new weekly pivot down there, 33.16.58. Would I like to see a trip to the weekly pivot this week? Sure. Did we see one last week? Not even close. It's way down here. So, the closest it was Sunday, Monday, and it just lifted away. So it never became an issue. Week before that, we were messing around with it all week long. Do I think it's going to go a second week without coming in and dealing with the weekly pivot? No. I think at some point we'll deal with it. They're going to need some news at their back. The Bears will need news at their back to get it down there. And then once it gets down there, if the Bears want to progress and go deal with the 9-day, they're going to have to do something about it. It's not just going to be, osmosis. They're going to have to, press the market to the downside. If not, then maybe we don't even get there. The dip gets bought. You make a higher high, and you rinse and repeat, and off we go. So my advice to you guys out there is don't fight price. It's okay to be short opportunistically, but understand that what you're doing is counter trend. Find your profits, take your profits, and move on. So good example for us was Friday. We were in a couple of shorts. We got out of the runner from a 36.75 short. We punched out. And then we spent the rest of the day kind of trying to figure out where we're going to get long. We ended up along 34 into the close, and it ended up being a good day for us. But when you're in that short trade and it's hovering down around a key level and it can't get through, in this case for us it was down around that 22 to 26 area and it can't get through, and it couldn't deal with our proprietary lower level, then you have to look at it for what it is. Don't be hopeful, don't be wishful that this is the big short, and take your runner, either step aside, try something in the other direction, And if it's meant to be to the downside, then you can always ladder down and get into another one, just find another risk marker. That's been tremendously successful for us. Rather than holding on kind of in your brain demanding that this be the big move down. And then when it's not, all you are is you're giving back a lot of your runner and you're missing an opportunity to be long. Okay? And, speaking from experience in the last couple of weeks, I've missed on a lot of these. I have let a lot of 10 plus handle runners on short trades come back. And I mean all the way back. So, it's easy to say, okay, well, this has got to be the move down. I mean, we've done A, B, C, D, E. It's time. It's this. Get all that out of your head. You're just overthinking the tape. Don't overthink the tape. Take your profits on the short side where you have them. And then, look at price for what it is. And if it's support, then it's support, and make the adjustment. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.